Okay, good evening, everybody. This is Brian Stoll for Timing Strategies, Wednesday, December 26th. Let's cut down to brass tacks. We've got a very interesting scenario developing here from a couple of our other videos last week, or comments. You can see that we had basically a gap right shoulder top, if that's what you call it. I mean, pictures in the clouds, really, but give it a name. And then we had a gap, head, bottom island reversal. I mean, you use the McGee book, traditional junk, whatever you want to call it. And now we've got another gap potential above here. We're getting these congesting gap islands, so to speak, right shoulders, bottoms, tops, hip, butts, knees and toes, I don't know. But it is very, very unnatural, this market, of what it's doing. This is an involved Fed Reserve, Treasury Department is involved in this market heavily. What's that going to do going forward? I anticipate, if you check out some of our other videos earlier, a couple of weeks ago, I'm looking to get short. We were short 40% as of the 10th of December. We took half of that off on the 18th, so we're only 20% short as of now. I'm looking to get short another 20%. At least back up to the original 40%, as high as maybe 65% going into the end of the year. Somewhere in this range. We'll see what happens when that happens. It's getting very close. Today was almost the call, but we didn't get confirmation. We're looking for maybe tomorrow or the next day. I want to bring up some other interesting points that we're getting here. We are short U.S. government treasury bonds using the Ridex Juno fund. That fund we've been long since the 29th of November. We haven't, bonds are a much more trending market, so we don't do a lot of in and outs. We try to put our maximum positions on at the right place, or maybe add with the trend at early points. You can see that government bonds have been bought up ever since the highs for the most part in the stock market, June, July, when all this financial garbage started falling apart. And bonds have been being bought, interest rates have been lowered, and of course that's because the economy is so fundamentally strong, and things haven't been better, and the economy and the stock market is so strong, but we need cheap money and we need more interest rate cuts, so to keep it strong, right? Yeah, you listen to the public machine out of Washington, and they'll pretty much sell you a bridge. So my point being with that is that as interest rates start moving higher, we are short U.S. government 30-year bonds. That's going to start putting a pressure on gold stocks, not necessarily gold itself, because for whatever reason I think the public's getting smarter. The rest of the world, India, China, realize that they don't want our garbage debt, magic money paper. And as the GLD, this is the GLD here, is starting to break above that 81 level, we are seriously looking about getting long a small position in the gold itself. What we may do is spread the GDX over the gold, because, and again, we may not do that. We've got some tests we're running, some spread ratios and relative strength matters, whether we're just going to get directionally long or not. But the GDX came back down into that support level from all the way back in July. We held it, we broke it, we regain that point of change, or that level of threshold. If we come back down and test it again and start heading back up, meaning if the market tomorrow comes back down to this level, or the next couple of days to that 43 level, does not go below it or test it too much or close below it, and then starts heading up, we absolutely will get long the GDX, or the precious metals, and we may get long gold as well. Next point I want to bring up is the XLF, which just can't catch a bid. I mean, we check out some of our articles. The problem is not what they tell you it is in the media, as far as oil and things of that nature, the terrorists, the Iran. It's the Wall Street money menace. And again, with the XLF, can't even get a positive close or a break-even close in a market like we had today. If we get a move that takes us back below this threshold of $29.30 on the XLF by more than 0.5%, we very well may get short the XLF using the SKF. I don't know, go into that. We've done that enough times. But that again remains to be seen. The end of the year is very touchy type of management, so you always want to go with lower position sizes, but you don't want to miss an opportunity. And then if we take one last look at the XLE, I still think that that's starting to top out. I mean, it's not topping out, it's making new highs. I mean, how can you say it's topping out? But I believe it's being squeezed, and when the when the 30-year bond eventually gets sold off enough, that's going to it's putting pressure on interest rates up. That's going to put pressure on the bonds down and pressure up on the dollar. Oil being priced in dollars and everything else in dollars. Yes, the XLE is by far an extremely strong gorilla, but sooner or later it's going to have its impact as well. What we do see coming in right now for the idiot wave fans out there is a two-leg or an ABC move up on a larger cycle scale, and I kind of consider these cycles more than idiot wave, but there's a major two-leg coming up into the $82 price tag on that XLE, along with a smaller 1-month two-leg coming in on the XLE from the November lows. That is also coming in at that same price tag, right at about 82, along with a fib level at that 82. So right around 82, if we keep marching up here with the XLE, we are going to be looking at potentially putting on a position with the antithetical 2 beta XLE, which is the DUG. And again, that remains to be seen, but I'm just letting you know what we're looking at, what's on our radar screen. So I'm not going to go into too much more detail. Those of you that would like to give us a call or send us an email, I encourage your comments. This is for our clients and any visitors that may have any questions as well. I try to do this to keep our clients updated on a daily basis of what we're doing and why we're doing it. So until next comment update, I wish everybody a good night and Happy New Year.